Let's trade some payments companies now. Scott Bauer is a pretty hip guy, though, so he's looking at Square. Scott, the CEO of Prosper Trading Academy. Tell me what you're looking at, because the run has kind of returned in Square. The bulls are starting to look a little bit more active again.
Yeah, no doubt. After it hit 100 or 101, whatever that top was, that thing fell down to $50. And there's a phenomenon or a technical indicator that traders look at called a 50% retracement. What that means, Oliver, is if you take the high to the low, in this case it's about $50, that 101 down to 50, divide that by 2 is 25. If we get back to that 75 area, in the instance of Square here, that should have been a real significant area of resistance, okay? Square powered through that. That's why I love this stock right now. Not only from a fundamental standpoint, also the technical standpoint. I think there's a lot more upside in Square than MasterCard or Visa, albeit probably a bit riskier, but I think there's a lot more upside. Earnings come out in MasterCard and Visa before they do Square, which could set the tables for the Square earnings that are at the beginning of August.
Interesting. So you're basically saying, look, we just heard from Deutsche Bank and Michael Keeley on the Morgan Stanley upgrade as well, why the fundamental story for payments overall continues to grow. Square has not partaken in their rally over the last 8 months since they peaked out in August of 2018. But your point is, we got stocks at highs, we got some momentum coming back into the market. Hard to think Square might not take part in that.
I agree, and again, I think there's more upside. Yes, there's more risk, but I think there's more upside. So I'm going to do a Kevin Hinks special here. Kevin loves trading a stock replacement type of strategy. That's exactly what I have set up here in Square. So what I'm looking to do is sell the 85 call of the week of earnings. So August 2nd expiration, 85 strike call. There's a lot of premium in that, but I'm buying a much further out, deeper in the money call. 75 strike out to December. $10 wide, but I'm taking in some premium in August here. I can buy that spread for about $9 or so. What I really like about it is it gives me a directional delta bias to the upside, so certainly a play for the upside here. It also allows me so much time, Oliver, to roll out that short option that I have and potentially collect more and more premium against my long December call.
Okay, so you've got the December 75 calls in there. So basically, Scott, you get the same effect as holding the shares, but a little bit more risk definition if the thing starts to fall down?
Exactly, because I have sold one other option against my long December 75 call. So if it breaks down, obviously I don't want that to happen, but I do have a little bit of protection to the downside, but I still keep a lot of exposure to the upside.
Yeah, all right, nice. Scott Bauer, I like it. We got to leave it there. We'll catch up with you soon. The CEO of Prosper Trading Academy at the SIBO. We'll be right back. Let's talk some more about the big macro picture.